Gold was soaring up to about 44 and a half. It's cooled off by $500 an ounce. But all the indices, the S&P, the NASDAQ, the Dow, all soaring. Crypto, including Bitcoin, has come back from where it was. It was not all the way back to 125,000 a coin. But regardless where you look at the economy right now here in the United States, a lot of things look pretty strong. What is your take?
So I think we're probably in the further innings of the market's bull run. We had a little bit of a disruption with that tariff conversation earlier in the year. That was more of a shock than a bear market. And I think we continue to see that risk appetite grow. So as the tensions on the trade front and China ease, and as that Fed conversation starts to look more and more like there will be consecutive cuts coming, you see capital now start to come out of gold, which I think is a temporary consolidation, even though it's been a pretty dramatic sell-off. I don't think that gold is done with its run. But you see some juice come out of gold, some flows come out of gold. You've seen those head into the treasuries, which has brought rates down on the 10-year below 4%, which is what we want to do. And you've seen the S&P 500, for example, equity markets continue to rally higher to all-time highs. So we're seeing some shift in assets and some movement from one class to another. Overall, risk appetite is there. It is good. I find it hard to believe that equity markets will fade heading into the end of the year. It's been a little bit of a brutal year as far as volatility spikes. Everyone wants to get paid, and no one wants to tread back down or retrace too far, because the higher and the stronger we close, the better most money managers will do and their investors will do. So as we get to that kind of November into December turn, I think we're in good position to probably add another 2 to 3% to the market and close up there for the year. Heading into next year, I do see us kind of extended, and I do see some risk, but right now, risk appetite is there, and it probably continues to be there through the end of the year.
So let me ask you this. The president meeting with Xi Jinping on Thursday this week. There is some discussion that the framework for a trade deal is in place. Despite the fact that China is not buying soybeans, they've done reasonably well. They're at an almost 52-week high, which is helping farmers here. Of course, new markets in biodiesel and from Japan have helped the agricultural sector. But what happens if China comes in and says, you know what, we're ready to buy beans again, we're ready to engage again, we're ready to get rid of some of these tariffs? If you have that and you couple with that with a rate decrease from the Fed, it could really rev things up even more, couldn't it?
It definitely could. Look, we want trade to be fair, and we want trade to be more tilted towards the US, which it hasn't been, right? So as we start to reduce these trade deficits and we start to take some income in from tariffs, and we can keep trade functioning, of course it's going to be good for the US economy and the world economy. In addition to that, we're bringing in private investments. There were just private investments again announced with Japan today, where we're bringing more capital onto the shores of the United States rather than exporting our wealth as we have done. We're now importing, taking on investments, and that will help the economy grow. So they're all good things. I think it's all moving us in the right direction. It just remains to be seen how we work out the final details with China, which will take some time, and then how we move forward with these investments. Do they come in? When do they come in? And how do we take advantage?
Yeah, the problem with China is that they tend to be, I think the word is dishonest. They don't always honor their deals, which makes it a bit unpredictable. But I can tell you this right now, the Dow went over 47,900 today, which is a remarkable number to say the least. I've never seen anything like it. I don't know that anybody has. So here we are with a remarkable number there. The NASDAQ over 23,000, almost 24, and the S&P over 6,900 for the first time. I mean, these are tremendous numbers. All right, so the last question real quick about gold. You think that it's going to continue to go? I've seen some predictions still holding to $5,000 gold. Do you think that that's a reality? What are your thoughts? Last question.
I do. I think that if you look at real rates, so inflation adjusted rates, if you look at the dollar, and if you look at inflationary pressures, global debt, for example, I think that you can see gold pushing through 4,000 to 5,000. I have gold on the near term. The trade signal for me at Ascalon 6 has shifted to negative. We'll be there for a little while, but on the longer term, I still have positive signals for gold, and I could see gold definitely moving up towards the 5,000 level.
And what's the longer term, real quickly?
I think at that point you have to see what it does at 5,000. I think the fact of it getting there is
my question
laid
is
out technically.
over what time frame? Are you looking at
I think a
6
move
months,
to
12 months?
Yeah, I think a 6 to 12 month period with the momentum that we have
All right.
and the story not really fundamentally have changed. We're seeing a shift in assets now, but the fundamental story has not changed. So 6 to 12 month time period, I could see us up 20% from here up towards 5,000.
Well, there you go. Another big win. Anthony Esposito, thank you for being here today. Founder, CEO of Ascalon 6 Capital.